Good morning. Welcome to the trade setup right here on BloombergQuint Live. And to all of us, well, all of us Indians at least, wishing you a very, very happy Independence Day. Of course, couldn't do it on the 15th of August except on Twitter. But yeah, wishing all of us that and maybe prosper and go to even greater heights, upwards and onwards, as we like to say. Okay, there is a situation in Afghanistan, of course, which a lot of people believe might have a knee-jerk reaction on our markets. I'm none the wise to say whether that will happen and how big of an impact that could be. Could it be a black swan? Could it not be? Remains to be seen. But I think most people that I spoke to said that it will not have a telling impact, at least as things stand right now. So that let's park that for the time being is all I'm trying to say. There could be noise around that, but let's park that for the time being from a market's perspective. May not be that big as things stand right now. So the normal trade setup now. US markets were flattish, no big shakes there. The key is, viewers, that while, I mean, this is what the US markets did, Dow, S&P, NASDAQ. But the key is that if you look at the earnings situation in the US and Europe, the street is probably the most bullish that they have been on earnings for a while now. There's this story on BloombergQuint.com. Look at this story. And if you can just go to the chart as well, it just shows you how amazing this chart looks, right? Because you've seen that the proportion of the buy recommendations in the US and Europe is the highest in a number of years. It's not just in the last few, in the last number of years in Europe as well. It dates back all the way to at least 2012. That tells you a story or two about how the earnings trajectory is likely to be. And markets are a slave of earnings, liquidity as well, but earnings. So that's the key thing that you got to keep in mind. So good going for the broader global markets at least. Asia today has a bit of a trouble. I mean, stocks in I think Kospi, Nikkei, etc. looked slightly wobbly. Nikkei in particular, but it's a mixed picture, you would have to say. Now we've had a bit of a rally behind us already for the SGX. I would reckon it will probably showing a flattish start in the session today. Let's get the SGX Nifty up on the screen once. Yeah, about 1/3% lower. It was flattish when I last saw, but as you can see, there's been a bit of a downward trajectory. Now, could this be the knee-jerk reaction that I was talking about because of the Afghan situation? Maybe, maybe not. Let's see. The markets, though, have been benign. Fund flows have been okay. The advanced decline ratio not looking all that poor as well. This is, of course, the MOE function on the Bloomberg terminal. And as you can see, 226 to 271. So, yes, slightly in favor of the decliners in the session on Friday. But still, I think the situation is not looking all that weak. Yes, pharma corrected big time, and some of the others corrected. But the situation is okay for the time being. Now, the beauty is, as I do every Monday, I'm getting you CK Narayan's story, a chart in that story, which speaks of, in technical terms, how we've seen a breakout of the breakout. Now, I never knew something like this existed, but he's charted this so well, wherein he's saying about how, if we look at the levels, when he broke about 15,900 or thereabouts, there was a breakout. And now with the candles seen in the last week, it's a breakout of the breakout, typically, which ends with some points higher. So I think wouldn't be surprised. He's saying, of course, that if we reach levels higher than where we are in the next 1 week itself, it's a pretty good read, by the way. You might want to do that. For IPOs listing today, I think the best amongst them, Debian International, expected to have a very robust listing. So let's wait and watch what happens there. I'll watch out for Exaro Tiles. A lot of bad blood because only a couple of mutual funds made an application in the first place to the IPO. But could be an interesting one, a dark horse of sorts. So let's wait and watch what happens to some of these. What about the stocks to monitor in the session today? I'm getting straight to the stocks instead of dwelling on sectors because they largely remain the same. Watch out for real estate, watch out for steel. I think those are the couple of things that I would want to look at. But in terms of stocks to watch, a bunch of very important names and a lot of names actually. So first, Apollo Hospitals, very strong set of numbers, I thought, compared to estimates. So forget the net profit number. That would have OPLEV and anomalies, one-offs, etc. But just look at the beat on the revenue front, right? 3,760 crores was the revenue. The Bloomberg estimate was 3,117. So fairly sharp uptick on the revenue front versus estimates. EBITDA margins came off a little bit, but EBITDA as a whole, obviously because of the revenue beat, went up as well, 519 crores. versus estimates of 434 crores. So margins came off a little bit compared to estimates, but a COVID test, higher COVID test, or what have you, treatments, etc. Maybe they're not as remunerative, but I think that the numbers look pretty robust. And the net profit, as I said, had one-offs too, so you've got to bear that in mind. But decent numbers. Then Fortis Healthcare, again, following on Apollo's footsteps, revenues 1410 crores, up 132% YOY, 12% quarter on quarter. EBITDA up 275 crores, up 40% quarter on quarter. There was a loss last quarter, so ignore that. And PAT, again, there was a loss, but on a quarter on quarter basis as well, up about 590 or 5.9 times PAT on a quarter on quarter basis. Very robust set of numbers. Could be an interesting stock to watch out for. I thought Gujarat Fluorochem, expensive as it is, was a decent set of numbers, and you will want to watch out for that. Revenues up both YOY, QOQ, EBITDA, YOY, QOQ, PAT, YOY, QOQ, and the operating leverage shows in the way the EBITDA and the PAT performances have been. So pretty strong set of numbers. I'll watch out for this one as well. So these three on the numbers front, definitely to be watched out for. Definitely to be watched out for on the numbers front is IGL. And I'm bringing you a brokerage note out here to just tell you why the numbers in the outlook were important. So the volume got impacted by COVID-19, but Nomura says, of course, that it could see a sharp recovery, which is why the outlook seems to be good. Gross margins improved in Q1 and further expansion likely in Q2. The volume recovery is underway, even though it got impacted by COVID-19. And the launch of new CNG variants might boost conversions. Nomura believes it will boost conversion. And the pickle, viewers, is that there's a 100% domestic gas price hike very, very likely in October first week. CGDs will probably pass on the hike. So that's the net shell. So it may not have a big impact on Nomura because of the price hike. And which is why Nomura's price target of 650 is wedged right in between some bearish and some bullish names. So I thought it was best to bring this name, by the way. Just one thing, if the price hike is going to happen, gas price hike is going to happen, companies like ONGC and Oil India will benefit. The hike will happen in October. Keep that in mind. Maybe pre-positioning starts happening in September. If you are constructive on the gas price hike impact on the earnings of ONGC and Oil India, you might want to take that. Actually, let's talk about the JP Morgan view on ONGC. Therefore, they are overweight with the target price of 190. They went up the target price, by the way. They've been this bullish now for a while. They are saying that the H for Q1 was strong, and it will improve further from the second half as the highest gas prices flow through, right? Simple, the point that I was making. They are saying that the gas prices are likely to be reset sharply higher in both the resets, and which will drive consensus earnings upgrades. The stock trades at this is the most important line according to me, the stock trades at a headline PE of 5 times FY23, and on earnings which reflect $55 to $60 per barrel of Brent prices versus spot Brent prices of 70. The argument I think that JPM is making, that it is already trading at a discount to what it should on crude price upticks. And if gas price upticks come in October, which is very likely, then the earnings upgrades would be very, very strong for ONGC, and I reckon similarly for Oil India. So that's the argument. I have no idea. If crude prices fall because of the COVID surge around the world, then ONGC will get impacted negatively. And as we all know, it doesn't react as much positively, but it definitely reacts negatively. So please keep that in mind if you're going out and buying a stock like ONGC. I think the street is very bullish on Tisco post the con call. Kotak Institutional Equities buy the target price raised to 1750. JPM overweight the target price raised to 1810. CLSA buy the target price raised to 1950. The stock is at 1467. It's had a bit of a rally already. You have to ask if you are still comfortable getting into a Tata Steel, but certainly the rally in metals seems to be far from over, because now the earnings performance is starting to kick in. The power of an upcycle is just so strong in some of these metal names, especially the ones which are backward integrated, the likes of Tata Steel and SAIL. That could be very interesting. Some other earnings in focus. Ease My Trip, I thought very strong numbers. Yeah, PBT at 20.8 crores in Q1 FY22. You have a travel portal clocking in a profit before tax in a COVID impacted quarter. Pretty strong numbers. It also shows not just the quantum of booking that they did, but the cost control that they did. Really good going. Rajpalayam Mills, the standalone margins came in at 21% versus 12% QOQ and a loss YOY. Again, textiles in focus, Rajpalayam no different. And I think Hero MotoCorp is a stock in focus again, because most brokerages have cut prices. The only thing is the stock is already maybe 30% lower from the average target price. So therefore, is the pain in the price is the question. I don't know. But the other point to look at is that Ola's launch, this whole buzz that the Ola two-wheeler has created, can it impact a Hero, a TVS, some of the others? Because it will certainly impact the scooter segment. I, for one, was very enticed to buy an Ola scooter. I don't know about you. So could it impact the likes of Hero, TVS, etc.? I don't know as much about Hero because it's trading at such low valuations. But TVS Motors, viewers, you got to ask yourself that question. Keep that in mind. Some other stocks in focus: eClerx, a buyback at about a maximum price of 3,200. The current price is 2,200 odd. A small buyback, so keep in mind tender route again. But yeah, the price is interesting. And Zomato, wherein CCI has approved the acquisition of the 9.3% stake in Grofers, so you got to watch out for that. And lastly, companies which are out of ASM include Cineline, Scient, and IFGL Refractories. So there's a few stocks that you have to be mindful of. So viewers, keep in mind, I don't know about the Afghanistan situation. Could it have a telling impact? Time will tell. But yeah, for now, market participants believe it could be contained. But remember, I mean, there is only as much view that you have on geopolitical situation, which was as swift as this. But Apollo Hospitals, Fortis, Gujarat Fluoro, Rajpalayam, very strong set of numbers, mid cap and small cap names. Tisco, very strong resultant reaction to the commentary. Hero Moto, weak reaction to the commentary. IGL, good reaction to the numbers and the outlook. So those are a few names that you have to watch out for in the session today if you want to trade. We are likely to start off marginally lower, so place your bets wisely. And if you're stepping out, which a lot of us are now, I'm not, but a lot of you are, please, please, for your own safety and for the safety of the other ones around you, stay masked up. Thanks so much for tuning in today. Jai Hind.